Good morning, good afternoon, everyone. Welcome to another round of Sushi Swap AMA series. Today we got Dopex in the house, and we're going to be talking about what they're all about and what they have to offer. I hope everybody's doing good today, and I'll just jump right into it, man. So we got Halko here.
Hello,
Halko, that's
hello.
the correct way to say it, correct?
Yes, pleased to be here. How do you guys doing?
I'm doing all right. I was a little sick last week, but bouncing back. I'm in full capacity, and I'm ready to go. I guess I might as well just jump right into it.
Mm.
Uh, to start with the simplest of questions, I just want to know what Dopex is about, what you guys have to offer, and this is a good place to start things off, man.
Absolutely. Yes, I think it's a very good question because um, it's always tricky, right, when you ask people protocols what they are offering. So in general, what Dopex is the options protocol, decentralized options protocol on Arbitrum. And most likely, if you hear this response, you already have questions, right? The question number one is, what do you mean options? Like, what are those options? Like, when you most likely, like semantically, use the word option, you think, I have an option to do something, right? Or I can do something or something else. But quite interestingly, there are also derivatives, so instruments that are also called options. And the name indeed comes from the fact that they give you optionality. I think maybe just to better maybe explain right quickly what the options are is in layman terms, right? I think, I think it's very highly likely because we are within the Sushi Swap community that everyone here has ever traded a coin, right? I'm pretty much sure that all of you have interacted with Sushi. You have all swapped and traded money coins, right? And whenever you just trade from one coin to another, what you do is you are pretty much trading them on spot, right? You buy a token, buy another token, buy another coin. If the price of the coin goes up by, let's say, 10%, the value of your trade also goes up by 10%, right? It's all like nice, linear, easy to understand. But the thing is that sometimes people have more needs. Maybe they want more risk. Maybe they want less risk. Maybe they want to kind of optimize the way they trade, they interact with the assets, and hence there was the idea of derivatives. These are like instruments that refer to the basic instrument. So for example, if you let's say hold sushi, whenever happens to the sushi token, it is reflected within your holding. But for example, if you want to onboard more risk, less risk, you may instead use instruments that would, for example, refer to the sushi token and behave based on the sushi's price, but within some various different ranges, etc. So I think the most popular, the most common thing are perps, right? Everyone has heard about perps. Everyone who is slightly more degen loves to trade perps. What are perps? These are pretty much leverage instruments, right? Which means if the price of like your underlying token goes up by, let's say, 10% and you are leveraged 5x, then the value of your position goes up by 50%. Well, of course, the same happens if your position goes down, right? But this is it. This is like one of the most, I think, common derivatives. And there is like another, you could say, family of derivatives called options. I think with the spot, it's all symmetric. Price goes up, price goes down. With perps, it's the same. Price goes up or price goes down, but on a leverage. But what happens with options? I think it's good maybe time to explain exactly what the options are. So the options are a financial derivative that would give you a right, but not the obligation to enter into a transaction. So for example, you would like to buy ETH at 1600, from 1 month from now. You don't know what the price of ETH is going to be, and you would like to get out from this deal if the price is going to be too cheap, right? Because if trades at 1400 or like 1200, you would be much better off buying on the market. But if instead if is at $2,000, I guess you will be much more happy to still use your option to buy it at $1,600. So what does it mean? That means that if you are looking to trade options, buy options, you are buying a right to enter into a transaction to buy or sell a predetermined asset at some time in the future. And I think when you think about it, you might think, well, that's a little bit complex, right? Because you hear many things, but I think the trick whenever you think about the options is that that compared to other instruments, options give you this asymmetry. So if you are a person that likes to take more risk, you may, for example, instead of opening a long position or a perf position, you may consider purchasing call options, which are like the options that refer to the assets price. Once again, if you have purchased the option, you have a right to exercise this option at the determined time in the future. If you have purchased this option and then the spot price goes up, the value of your option goes up by much faster. If unfortunately the asset you are referring goes down, the value of your option very quickly goes much lower. And I think it's good time to say that, well, there has been, I guess, more than a few complex topics introduced here. So I think the best also way, if you would like to learn more about options, we have a pretty great source material called Dopexpedia, where as a newcomer you can just go there and learn everything that you would like to learn about the options, about our products, etc. So I guess that's the quick runway, which means in general what Dopex is. Dopex is a platform, is a decentralized exchange, allowing you to trade derivatives that are known as options. And we are on Arbitrum, and the assets that we offer you are ETH plus many alt tokens. And in addition to like basic options, we are also working on embedding those options into more DeFi products, about which I guess I'm very happy to talk a little bit later.
Yeah, I was looking through your knowledge base a little bit, and I see you guys have actually quite a few different avenues or instruments, I guess, as you put it. I'm generally a pretty simple trader. I don't have a good grasp on leveraging long and short and such as that. So you're actually educating me quite a bit. As far as the other, well, I guess the other instruments that you have, I saw you have bonds, you have single staking options, a vault, time weighted average price order splits. What are these?
Yes, I think it's a very good question, and I think it's the trick is that maybe we should start with when talking about our product overview. I think the most important thing are right now the single staking option vaults. What are those, right? I guess you just go to our website, you saw those mysterious SSOVs, what they are. I would say as follows: people would, whenever you talk to people, what's the hardest question that people may always ask you whenever you talk with people that are, let's say, new to some branch of of assets? They would say what to do, how to trade, what to buy. And you quite well know that this is a very complex question because there is no good answer. There is never a good answer here.
Right.
Which means if anyone would ask us, hey, I would like to trade options, what's like the best way to do this? There is no silver bullet, right? First of all, I guess you should once again check the knowledge base. If you also would like to learn more, check with our Discord, where we have like very helpful people, quite crazy but helpful people that can help you with with learning, with understanding more. But I think that the thing is that with options, it's, I would say, less about thinking which options to buy, to buy, to sell, but more like with understanding what do they do and what do they allow you to do. So with options, right, we have two parties. We have, as we have spoken before, we have the party that buys an option. So if you are most likely buying the option, well, you take a lot of risk. You are the risk taker. But on the other side, we have people selling options. And if you are that person that is more on the option selling side, what does it mean? You are the person that is very, very happy to collect premiums from option buyers, right? You sell the options to them and you hope that these options would remain worthless, which means you collect premiums from them, hoping they remain worthless. One day they are not. Unfortunately, you have to pay out the loss. So if you are the option buyer, it's more like taking rather more risk, paying a premium as if you were like buying an insurance. If you are the option seller, it's more like you're collecting extra yield. But one day you may end up needing to pay for the tab. And the trick was that these ideas may be at first slightly intimidating, slightly complex. So that's the idea of SSOV, so single staking option vaults. Because I guess that what's the most important thing in DeFi for the product to be successful? I think it's safe to say it's liquidity, right? And I think like always number one struggle for any exchange is having enough of depth, right? Because if you have customers, they come to you, they check what you offer. If you don't offer the product, if you don't offer good execution, they go somewhere else, and you don't really want to do this. You don't want for those people to go elsewhere. So the thing number one is to bootstrap liquidity, and the bootstrapping of liquidity with options is always tricky, right? Because we all know that even LPing a pair of tokens in a DEX is already fairly complex, and having to explain this to people, onboard them, is already a challenge. So the question is, how do you onboard people to options? Because when you think about this, you tell them, hey, here is a magic box. You provide liquidity. You are buying options, selling options. You are taking the other side of the trade from the traders, and they will be like, okay, but what exactly do I do? Do I have like control of my risk? There is a lot of complexity, right? I have some questions, and I think it's very fair to say that, well, yep, there is a lot of base-like complexity here. So our idea was when SSOVs came to life, it was middle of 2021. And it was, I guess, like the second wave of DeFi. And what people absolutely loved to do, people loved to stake things, right? It doesn't really matter if your token had any kind of utility or it did something, but I believe it was critical, it was crucial, right, to stake your token somewhere, right? It was like stake your token to receive X, stake your token to receive Y, right? Stake your token so that this token does something. So our idea was to reach out to those people and say, hey, you can stake the tokens with us, which means we'll still put your tokens in some farm. But in addition to this, you can also start selling options on your tokens. What does it mean? That means that, for example, if your token's price today is $100 and you are selling calls at $140, that means that whenever someone buys a call for you, he pays you even more of your token, right? And that's the token that, well, you want to farm, you want to collect. If you would start selling options, if you would start charging premiums for this, you would start collecting, accreting tokens even at a greater pace. However, once the token price hits 140, right? So this is the price at which you agreed to like sell the options with Strikeoff. You will be forced to sell those tokens of your at 140. But think about it. Right now the price is 100. You are selling the options. You are also farming with your token. So you are collecting your token plus option premiums plus a lot of stuff, and we would kind of force you to exit your position at 140. So not only you win whenever your token price goes up, but also you gather some extra tokens, and then you just exit at 140. And people thought, okay, that makes sense, right? Suddenly, all this complexity behind options started to, I guess, be much less scary. And people understood that, hey, if I start providing liquidity in SSOV, it's like I would have placed a sell order, an exit order, and this is the price I'm happy selling my tokens at. And in the meantime, I'm very, very happy to sell the options on my tokens just to start earning more money, more tokens of mine. And it turned out to be quite successful, right? Because it was very, very easy. We just gave people the opportunity to choose, for example, from 4 strikes. You could do this with ETH, with STETH, with various Arbitrum ecosystem tokens, with our token, and people like this. People like this simplicity. People like this clarity. They were like, okay, I understand I'm doing something complex, but now this complex is much more simple. So technically, I'm providing liquidity for options, but actually, I'm, for example, feeling as if I was farming on my deep out of the money sell order. So that was I think the whole story. So with SSOVs, that's pretty much what you do. You can put your token, we farm them from you, we stake them for you. You sell options, we collect premiums. If the price hits your strike, it's as you were forced to sell at this level. And I think that's pretty much everything around the magic here. And it was like the level 1 to introduce people to the options, plus also a kind of a lesson for us to see how people interact with options, how do they understand this, what is their decision making. So I guess it was a lot of interesting things both ways.
So there's not a whole lot of risk in taking those then, because you're
yes, but very still. I mean, it's absolutely not risk-free. It's a risk, but we wanted to make that this risk that people are taking is very, very, very transparent, right? Instead of like, creating some magic pool that says we sell your options and you have no idea what's happening inside. Instead, you have you have this, you could say, very high level of transparency, and then you are taking a risk. I mean, it really kind of depends what you understand as risk. Because if you would like to exit your position at this strike, then that's not a risk pretty much. But if you are much more of a speculator, right? You are that kind of a person that thought, well, I'm willing to take a risk to collect money from options, but I really hope they actually do not expire here, right? So then if they expire and you are kind of forced to exit your position, then there was a risk. So it really depends on you. It really depends on the individual, on how do you think about this. So I would be very careful about saying there is no risk. For some people, indeed, it could be a pretty much a trade very, very in line with how they think about risk. But for some others, right, they may be, slightly more skewed towards more risk taking.
Yeah, I don't see. Yeah, I could see like I don't know. If you said you sell at 140 was the number that you had put there, and you would assume that there'd be a lot more opportunity for pumping up to a higher place. I suppose it's one way to look at risk.
True.
But
absolutely, that's true. But then you might have just like seller's remorse because you even see the token to pump to 200.
right.
So,
Yeah, precisely.
So that's why it's I'd be very careful, right, with saying no risk. And I think it was instead the other way, right? If you are the option buyer, then well, you are pretty much betting against this guy. So you think, okay, so right now the token price is 100. He's selling the options with a strike of 140, and given you have to pay the premium upfront, this premium would be, for example, let's say very small, like $1 to $3, right? But if suddenly the price climbs to 150, 160, etc., then your $3 of yours that you put there, in some rare cases, right? We just need to see some crazy, right, price behavior would turn into, right, like $10, $20, $30. So that's the thing. And I think another thing with options is because I guess like everyone here is a very risk-taking individual. I think it's safe to say that people in crypto in general, they are very, very skewed, right?
Oh yeah, that's DeFi.
Risk-taking.
Yeah.
but there is a thing, because when I think about this, options are also pretty much like insurance on your instruments, because I guess we have been always, so far we've been talking about the all scenarios where you buy the option and you win if the price goes up, right? Very bullish things. But actually, there are also options that gain value whenever price goes down, right? They are called put options, which means if let's say today's token's price is $100 and you are buying the put option with a strike, let's say $90, it gives you a right to buy this asset at $90, which means it's to sell. I'm sorry, to sell this asset at $90. Which, once again, when you think about it, it's pretty cool. Let's say you are holding a huge bag of tokens, and you are fine if the price goes down to 95. You are fine if price goes to 92. You are also okay if the price goes to 90. But if the price goes down to 60, you are very unhappy. So what you can do, you can use options as the insurance, which means you, basically speaking, keep buying put options, let's say with the strike of 90. And and what happens then? What happens is that if spot price drops to 60, you can use your options and you can still sell your tokens at 90, even though the market price is 60. So this way, the options act as an insurance. Of course, you have to pay the premiums, so you have this cost of insurance. So you also need to think whether you're like fine to spend this money on insuring your position. But I think that especially whenever we feel there is some DeFi top, I guess we always see, well, price behavior exhibit some very interesting behavior, right? So things may go down like 90%. So maybe if we're like close to top, buying puts on everything you hold as an insurance, maybe that's not a bad play, right? Because you never know on which day you wake up and you read that, I don't know what else can happen, because we already had this year so many things blow up. But let's say fast forward a few years from now, once again something blows up. You never know when, you never know who. But you have options. You can just sleep well, because you know that even if something bad happens, you have been insured against this. And I think this is a very underrated thing when it comes to the options that I guess many people mostly think about them as the instrument for speculation. But absolutely, there is also a lot of room to use them as a protection against risk.
Okay. And when you're staking, that APR that you get for staking, does that come from the premiums?
It's a mix, but it's mostly from premiums. So it really depends, because your front end would show you the base APR, which is from farming. So for example, like for ETH, you should see a few percent. And then once you start interacting with the vault and you start collecting premiums, you will show separate stat line for your premiums down there. So it's pretty much separated to show which portion is risk-free, comes from farming, and which portion is related to the risk. So these are like premiums from selling options, but this also means there is a risk embedded, because one day, instead of positive APR, you may be forced to pay out to the option buyers.
Yeah. Okay.
And
that's interesting.
So pretty, and I think it's also worth giving, because there is also a very interesting thing, which I think it's worth giving a shout out, because I'm not sure if many people know. I don't know if I will maybe just spill some beans. So long story short, you may know this, you may not know this. There is already actually a functionality that uses both Dopex SSOVs and SushiSwap LPs, and it's pretty interesting. So there is a protocol called John's DAO that was built on top of Dopex, and they have a thing called metavols. So right now they have two metavols. One is for the DPX ETH LP pair on Sushi, and the other is for RDPX ETH LP pair on Sushi. And it basically does things kind of hands off from you, which means if you are farming, if you are LPing DPX ETH or RDPX ETH on SushiSwap, this vault would pretty much take all your rewards, and instead of compounding them, it would buy options on Dopex. You just choose whether you are bullish and it buy calls, or you are bearish and then it buys puts. And it's quite interesting, because I know that the guys were doing some research, and if you would, for example, see how the metavols would have behaved last year, using metavols, so mixing farming with option buying, would have outperformed just farming. Why? Because we saw a lot of dramatic movements last year, right? So price behavior was crazy, which means if you are buying options, you are betting on some unexpected events, and 2022 was indeed a year to bet on this. So so even as the Sushi LP, you have this opportunity, right, to basically LP on Sushi, use the Dopex options, and combine both hands off, which I think it's kind of a thing that was built in the background, and I wonder, maybe we will see more stuff like this, because that's that's also a pretty cool thing, because that also means LPs on Sushi, they are not bound to only one kind of level of impermanent loss, right? Because if you start buying options, and suddenly your impermanent loss graph starts to look very, very differently, which means sometimes instead of IL, you may even gain, or maybe sometimes instead of huge IL, you just take a smaller portion of IL. And when it comes to Dopex, then we have a thing that I guess every protocol gets, right? Which is pretty much more volume, more utilization. So it's kind of like a win-win for both. And another kind of thing that Dopex has been trying to do with the cross-protocol interactions is, once again, we have spoken about the put options, right? And the put options, they are the insurance. But the thing is, well, let's be honest, selling insurance in DeFi is not something that has been too popular, right? All the insurance DeFi protocols haven't really taken off. So our trick was, well, but what if we would embed the functionality of options into our protocols? So right now, I guess like coming from Arbitrum, right, the most, I guess, degen safe hub on Arbitrum right now is GMX. That's the perp exchange, and well, I guess everyone has been trading perps, betting 50x on whatever they think is happening. But of course, when you trade perps, it's very it's very easy to get liquidated, right? Because let's say you open a long, let's say you open a 10x long, which means if the price goes down by 10%, margin called goodbye, you are dead. But it's a cool thing, because what if you open a 10x long and you buy 10 put options at the strike slightly above your liquidation? That means that, hey, your perp, if price goes down, your perp starts to lose money. But what starts to gain money? Your put options. And what starts happening is that your put options start to gain value at the same time as your perps start to lose value. So we have created, if you like go to our website, you can have the liquidation protection perps, which means this functionality would interact with Dopex and with GMX. So it will open a long for you and hedge it against the downside on Dopex, which means you can be liquidated for as long as the option is active. And of course, if you are right and the price goes up, you win. If you are wrong and the price goes down, you are still on a borrowed time, because until the option expires, which could be, usually options expire every Friday. So most likely until Friday, you are still alive and kicking, and you still have 1, 2, 3, 4, or a few days for the market to rebound and go your way. Of course, you are buying options, so you have to pay premium upfront, which means the whole cost of the package is bigger versus opening a regular perp, right? Which means if the price goes up, your profit is not as huge as just by opening a regular perp. But well, maybe, as people say, sometimes it's better, timing the market is more important than like timing the market. So maybe if your timing was incorrect, but you still think that you will be right within a week, then instead of going with like next leverage position, you can go to Dopex and you can open a protected position, right? And then you are free from liquidation and you have more than a few days to be right. So that's another kind of a cool thing of options that the options present to you. And I guess that this is something that we have noticed. This is like very underrated. And this is something that we want to continue exploring, right? Which means not only how to onboard people to options regular way, so have active users, but also how to onboard options into other protocols so that people are using options in the background, because this is a very good solution for them without them having to manage this, without them having to kind of learn everything about options. So how to fully abstract this, and I think like all those examples that we have here, right, in the design process, in the like architecture, I hope this is what matches the expectations of the people, and it kind of makes their life easier, right? So instead of thinking, wow, I have like no time to read all the books about options, or wow, I want to maybe use options, but I don't know how to really do this, or you think, well, I maybe would try doing this, but I'm too intimidated. That's where you can use some of the products that take a lot of kind of like this load off from you, abstract a lot, and basically speaking, they tell you, hey, here is some kind of a predetermined strategy or mechanism that uses options. We have a lot of already prepared for you. You just need to confirm the last few parameters, and then here you go.
Okay. That is that the Atlantic insurance, that protection that you're talking about? Okay.
Yes.
All right. That's interesting. I was reading about the Atlantic straddles and such.
Exactly. Yeah. So the whole kind of like idea of Atlantics, it's like the umbrella term for the options, for like option products that are either embedded into something else, into other protocols, or the option products that interact with other protocols in the background. So that's like pretty much 100% of DeFi compatibility, both ways. So that's, I guess that's that's the concept here.
All right. The next one I wanted to ask was about that time weighted order split, the TZWAP, as you guys
Yeah,
got labeled.
that's a pretty cool thing. It was actually it's a very interesting story. I don't remember if I got this story correct now. If I don't, like guys, like shout at me. Long story short, I recall that TZWAP was something of. So I believe the story was that the team was working on a certain solution, and the TZWAP kind of came up as a solution to help with TWAPing as basically extra something on top. It was used internally, and then people thought, okay, it's a very, very useful thing actually, because there was no TWAP function on Arbitrum. And we will be very, very happy to maybe share it. So that's how the code was opened, so that anyone can use TZWAP, and TZWAP allows you to TWAP from token to another token at the parameters you would like to choose. So so if you would like to enter into a large size transaction, you would like to hide it, or you would like to limit your price exposure, etc., instead of like going to the website, hitting sell, and that's going to be a huge sell. Instead, you can use TZWAP and check back in a day from now, and then your huge order would be spliced into many, many, many smaller packages, and those packages would hopefully reduce your price impact that you are incurring on the LP.
Yeah, I could see that as being useful for us in times when we'd be paying out the sushi bar and would have to move things cross chain. It could be I could see the
Absolutely,
price impact
absolutely.
being pretty significant for some of those chains.
I think it was interesting because especially before April, when people were very, very wealthy on paper, we saw some crazy big transactions go through TZWAP. I don't recall the correct story, but I recall that someone was monitoring TZWAP, and then people went crazy because whenever they saw that something is has been TZWAPed, they would like spread rumors. Who was that? What happened? Etc. Etc. So it was it was pretty funny. But no, absolutely, if you need to splice your order, that's a very, very cool tool. So you are very, very welcome to try it, to use it, and I think you can use all the all the parameters that you prefer.
I guess I should have asked about this earlier when you were going over the options, but
Mm-hmm.
all the Greek designations that you have, like
Mm-hmm.
the delta and the is are those just actual different types of operations that you do with those, or
That's a good question. With with Greeks, I would say it's always, how to say this? It's always quite interesting with the Greeks, because that's one of the things what people come across with options. They see some Greek letters, terms, they get flashbacks from math class at school, and
yeah?
they like, no thanks, not for me. No, I think it's very interesting because how to explain this? The Greeks themselves, they are just the mathematical measures of sensitivity of your option value. So I would say as follows: is if you kind of start exploring options, that's good to briefly go through what does it mean. And then once you start having a better grasp of the options, you should go back and really think what does it mean. Because with the options, right, for each option we have the value of the option, right? We know we have to find out how much the option is worth. So that's why we have various things called Greeks, and they tell you how much the value of the option is going to change if something happens. So for example, we have delta, and delta tells you how much the value of the option will change if the underlying price is going to change by 1%, right? So for example, if we have if options and they have a delta of 0.5, that means that if moves by 1%, your option value would change by half of that, so by 0.5%. And this is, this. So I hope it sounds much less intimidating now, right? Because it really just tells you what happens to your option value. We have we have a thing called Vega, and Vega pretty much tells you what's going to happen with the value of my option once things get more volatile or less volatile, right? Because of course, once the things are much more volatile, you are much more likely for your options for your underlying asset to move a lot. If it moves a lot, it's very likely to expire in the money. So these parameters tells you what happens to the value with your option if volatility goes up or like goes down. We have a thing called gamma. Gamma is actually a little bit complex because we have spoken about delta. So delta tells you how much the value of the option changes if price changes. But there is a funny thing, is like delta is not constant, which means whenever the price moves, the delta also moves. And the people thought like, okay, we need to go much more in depth. And gamma tells you how much delta will change if underlying price changes. So I guess that if you are like new to options, it may sound slightly intimidating, but on the other hand, if you would start kind of thinking about this, those concepts may start getting more quite helpful to you. And even if you LP, if you provide liquidity, right, on Sushi, you may also see some kind of familiar things, right? Because also when you are LPing, right, there is this thing that has, I mean, the most popular term, the IL, the impairment loss, right? And the IL also depends on how much the underlying price moves. So the thing is, once you start kind of like thinking about those Greeks, you may find out that, hey, actually, there may be an application of those Greek letters, right? Even in my even in my liquidity providing adventure. So that's, I guess, what I can say about Greeks. I'm sure there is more to say, and I think once again, check with Dopexpedia.
Oh yeah, your blog has a lot of information. It's a pretty stellar job there. That was the article I remember looking through.
Mm-hmm. So exactly, like feel free to check with us, and I guess that the trick with Greeks is like, try to like understand the concept, right, in general, to just see how it behaves, and then you will notice that even if you are not like using options a lot, it will help you with many other DeFi concepts, I guess, because right, every single time you do something where price changes and you have some risk related to this price change, maybe knowing the Greeks would also help you, maybe like think, measure, conceptualize your risk better, hopefully.
Yeah. The next thing on the list of things I wanted to ask you about were the Bridgers bonds, the bonding program you have.
Oh yeah, that's that's a very interesting one. So It was a very interesting idea, which means, as we, I guess, one of the things in DeFi is you need to make sure that you are ready to weather and withstand any condition. So last year the idea was born. How to say this? Because within the community, right, you have a lot of people that are pretty much the project OGs, right? People that have joined on day one and they have been supported, or you also have some latecomers, right? People that missed the public sale, but they joined a few months later, maybe 1 year later, and they have been supporters ever since. So our thought was that, well, if we would obviously sell tokens from time to time, it would end up pretty much going on the market, which is not really benefiting our regular users. But we thought, okay, but actually there are loyal people who are very happy to basically increase their stack. They are very, very happy to increase their stack of the assets that we have, but at the same time, and we would be very happy to sell them some tokens at a discount, right? At some certain discount in exchange for like USDC or ETH. But of course, there was the idea how to pretty much make sure that people that have been like community OGs, loyalists, are the ones that can enter the program and purchase the bonded assets. And that's the thing is, a long time ago, we have distributed the NFTs bridges for people who bridged from mainnet to Arbitrum. And those NFTs have been redistributed to the community OGs, which means in general, everyone who, after a few months of trading, it was safe to say that only people that are like OGs have those. So the idea was who can access the bonding program, right? And who can access some opportunity to buy some small amounts of DPX every month, like every other month at a discount. Or well, people that own bridges, that own the bridger NFT. So this way we kind of do not have this problem, right, of like mercenaries engaging with this, looking to buy on a discount and sell instantly a few days later.
Right.
But instead we are like very sure that it will go to the loyal holders. And it was pretty interesting because indeed what we observed is that yes, but well, if you own a bridger, you are the OG, there is a secondary market for the bridges. Also kind of market itself takes care, the market itself takes care of making sure that there is some kind of, you could say, gatekeeping into the auction, which means if you want to have a bridger, if you want to access the auction, you most likely would need to buy the bridger on the secondary, which is some upwards investments. So I think it kind of discourages mercenary capital a lot. And instead we see that the tokens go to the community members, which is pretty cool because it has, even during the last years, like bear market, it allowed for the team to also keep like scaling, keep expanding, keep working on things, and this way everyone feels that we have many years of a runway, hopefully, or instead of many years of a runway, a lot of room to scale up quickly. So I guess that's quite important, right, with the current conditions.
Yeah, that is a good idea because yeah, it does give you a more stable user base that the value is actually in the hands of people who care. Yeah, and don't want to just dump it immediately.
Yeah. And of course, that's also for us, right? Because we want for this program to continue over long term. And of course, people, well, we want for the program to continue over long term. And people are smart and they will not purchase something they do not believe it will gain value in the future. which on the other hand, it kind of bonds, once again, it kind of, how to say this, it confirms the team's commitment that people are here to build and they are here to deliver, right? Because if we want for each bonding auction every other month to be successful, to be fully filled, we need to make sure that people that are buying those, they are confident that, well, they are here for the long term, and we need to inspire this confidence, right? And how we do this? By delivering, right? By shipping, by producing. So yeah, I guess that's the answer here.
I guess that's a good opportunity for us to segue into the tokenomics of your project. Just the DPX token is more than governance, right? Like it. I saw you had dividends and such incorporated into it. Is that correct?
So in general, right now we but I think it's I have to frame this answer, but I would say as follows, that we want to have basically a split of functionalities between two tokens. So we want to pivot for DPX to be more towards vested locking, sharing of whatever protocol collects, and the voting power. So decentralizing governance. But of course, there is this challenge, and I think it's a very, very interesting one when you think about this, right? Is that there is this pitfall with the governance, which means if you decentralize governance too soon, you end up with a startup run by bureaucrats, right? Because you are unable to make any kind of quick decisions without having everything voted and vetted. So right now, we are still yet to roll out the governance because we still do not think this is a correct time, and this is like something that builds value for the token holders. Because we are still like in this early stage of building, testing, iterating, and most likely once we have this very, very stable base layer, we will be much more eager, right, to move toward further decentralization, and by doing so, we would finally open this for governance. I think it's quite interesting, right, because some people have said throughout the last year that with governance, decentralized governance only makes sense if the holdings are really truly decentralized, because otherwise, right, it's just the plutocracy or oligarchy. Because that's great, there is a governance, but what does it give if still the power is, for example, in the hands of few whales? So that's why we want to roll it out only once we kind of like truly believe that's a good time to do this.
Okay. Yeah, I can understand the issues behind several whales calling all the shots on governance. We're pretty aware of how that works around here.
It's always like risk reward, and I think we are still at this point where we are much more in favor of like fast decision and fast execution, and only pivot towards delegated, voted execution down the road. But I also think it's very safe to say that yes, well, everyone is quite committed to this in the long run.
That's good. And so the rebate token that you guys you guys give, I'd like to know more about that. How that works.
I think that's a very good question because I would say how to answer this.
It might be a bit of a wide,
because there is a lot of things to talk about here. But I think that the safest answer would be that this is a token that was planned, and we want to keep rebating users if they incur some kind of, let's say, losses on like very tail mispriced, unexpected events whenever they provide liquidity to the protocol. But of course, you need to have more use than this, because otherwise it does not make too much sense to create, right? A token out of thin air. And that's why there is the whole, you could say, level of tokenomics that we have. And I think, once again, would be the safest to read the white paper. There is the DPX V2 white paper that was released last week. And the paper exactly explains how we want to do, what we want to do. But in general, we want to create, we want to use this as a platform. We want to use this as a platform towards creating synthetic assets, so that it allows for asset collateralization, and also it would allow for the protocol to bond this, which once again it's hopefully fairly in line with with many DeFi designs, and would also allow protocol to have the control over the token emissions and the distributions on how the rebates are issued. And I think we could talk a lot here, but I think the best way will be, for me just to recommend having a quick read, or there are many threads by our esteemed community of traders. So hop on Twitter and search for RDPXP2 or read our white paper, and hopefully you will be able to find the full overview from A to Z.
Okay, I actually got a question here in the text chat about that white paper.
Okay.
Yeah, someone says it says it requires a 25% OTM perpetual put. Can you ask what that put is? The OTM.
Yes, that's a put option with a strike price that is 25% out of the money. What does it mean? It means that let's say if the option price today is $100, then the 25% out of the money option would be a option with the expiry price of $75, which means it will give you a right to sell the token at $75. So I hope that answers the question. But in general, it will act as basically tail risk deep insurance of the price. So once again, I guess we go back to that initial right thing with options acting as options acting as the insurance layer.
Cool. Makes sense. Yeah, the synthetic stocks, the synthetic assets part of that interests me quite a bit. I think that stuff's pretty cool. Being able to trade outside of the actual 9 to 5.
Oh yeah, hopefully. I think it's still a very. I think it's a very, very long way to go here, and right, I hope we will not disappoint.
Yeah, I can understand that can be a little difficult.
Yeah, exactly. Because I think in general, right, the idea of the sense of the synthetics has been conceived already on a very early stage, and this is something that everyone has committed since day one. But once again, we have this thing of one thing is to ideate something, but then there is always the question of a proper execution. So I think it was for us, it was the thing of how do we execute this properly, and I think it's still in this process where we are looking for the most efficient, the most safe way of this. So I guess I guess the safest answer is to stay tuned, and hopefully we will be able to keep explaining, keep building, and keep shipping, and you will be able to see more and more info throughout the upcoming year, and I think it's going to look quite nice, quite fine, because I guess like 1 year ago, I think it was like 1 year ago, the idea of Atlantics was conceived. Fast forward 1 year later, we have working products. So once again, right, if you see the commitment to synthetics, that means that that's not just a commitment, but something is already being cooked in the background. So hopefully, everyone will be able to see more in due time.
This is a bit of a different type of question I got for you, but I understand that not every country is able to participate, right? Is able to use your exchange. I'm just curious why that is, right? Like why the US, for example, doesn't allow this.
Yeah, I think that's a very good question. And I think this is a very hard question. I would say the best answer would be just to ask people who are very, very well versed in law, in like legal terms, because I'm afraid that like whatever I say might be more of the apocryphal nature, which which means I may not be able to explain this correctly. But I think that in general, right, the idea here is to so I think in general, the idea, I believe, is to be in line with more or less various global and local laws, and then be kind of like aware that sometimes offering like certain products, certain solutions has different interpretation across various geographies. So even though I guess we are not sure, and even though I guess many people are not sure, we still kind of prefer to err on the side of being slightly more conservative, and we see that this is the same that like many DeFi protocols have done, which means pivoting towards certain geographic limitations on the original front end, and pivoting towards decentralizing the front end, so that front end is one thing, because conceptually, right, front end is not the protocol, right? The protocol itself are smart contracts that are on the blockchain, and the smart contracts will and are and always will work. Front end is more of the interface that helps with it. So I think it's much more likely think about hosting the front end and allowing access to the front end, and that's why we want once again to hopefully find a better solution through having the decentralized one, and hopefully we'll be able also to tell something more about this soon.
All right, thank you for expounding on that. I find that.
Yeah, I was like trying to say something within my knowledge, but once again I will not try saying any too complex terms, because I do not think it's a good idea, right? It's once again people who are much more well versed in various local regulation, etc., are, I believe, in a much better place to explain this. For us, we just thought, okay, this is what was recommended, this is what like everyone is, I guess, doing, which means let's stick to the market standard, and let's pivot towards the decentralization.
Yeah, I won't question the infinite wisdom of the SEC and Mr. Gensler. Yeah.
Well, I can comment on this, I guess. Yeah. So
That was the brunt of the questions I had. I don't know if anyone in the audience would like to ask anything. If you'd like to raise your hand and come on up, if you got anything. That was the majority of what I had.
Yeah, guys, feel free to shoot with questions. Anything you think about, yeah. Unless, I I think I was, I was trying to go quite in deep with many things. So maybe everyone is already tired, of listening to the options. But maybe that's also fine, because even if you would have any option like questions, later in the day, tomorrow, or at any time, join our Discord. We have a very interesting group of people there. So any questions, any concerns, anything unusual you might be thinking about, they will help you. Plus, we have many other fun things. No, I guess it's always about like community. So it's the same, like like you join the Sushi Discord, on which I have been like for. I need to like click on my profile. When did I join? Huh. It says June 2021 on Sushi now. I am sure I was earlier. Anyway, anyway, you know how it goes. Every time you are on a Discord, it's also about community. So, general chat is one thing, but in the end, we've got people discussing everything. You may end up with quite esoteric knowledge once you join our Discord.
For sure. Yeah, even the price talk here, that's the best channel in my opinion.
Yeah.
That's always been where the most camaraderie and the most interesting things usually come up. But yeah, let's go ahead and get, I guess some links. We got your knowledge base and the blog there, but we should get your Discord in the text channel. I'll go ahead and we'll grab it. And we can,
we have a Discord channel called Depths of Hell as well, if you would like to check. Really, there is a Discord channel called Depths of Hell. It's it's ruled by our CEO called Nutoro. He's actually not the real CEO. He only pretends to be, in case you asked. And by Bulma, I'm sure you know Bulma from Twitter. So they are the lords of the depths of hell. And if you would like to ever check the depths of hell, you are very welcome. Or maybe you should not check there. It's a horrible place. I wouldn't wish anyone to go there.
Yeah, go goblin mode. Jump in. But yeah, to close this out, so the biggest development you've had recently was that V2 white paper you put up the other day. Is that what you were saying? I'm sorry.
Yeah. I'm sorry, yeah. So once again, with a V2 paper, I think with V2 paper, I guess like once again the best. I'm sorry, guys. The best recommendation is check the paper, check the Twitter threads, check our Discord if you'd like to discuss this, because we had degens dissecting this paper into small pieces to understand what was actually there. So you are very, very welcome to join the community.
All right, Halko, thank you for coming out today, and thank you for being so expounding upon all this. I did learn a thing or two today, actually more than two things. So
thank you. Yes. So thanks again, once again. Thanks for your time. Thank you for listening. And once again, any questions you might have, always, we are very, very happy to answer. So once again, thank you very much.
Well, all right, everyone. I'll see you in the depths of hell.
Don't go there.
And yeah, I'll just go ahead and shut it down here.
Thanks. Cheers.
Cheers.